All right, guys, what's going on? It's Eric here. So we're gonna get into this little video here. It's gonna be very quick, very short, very sweet, straight to the point. Basically, I'm gonna show you guys how I was able to save myself, well over $1,000 today in the market. Pretty much implementing my strategy, sticking to the rules. So I'm gonna break that down for you, how I was able to see what I saw, so you can, get the importance of understanding risk management and why sticking to your plan and your strategy is very important when it comes to day trading. Eliminate emotion as much as possible. Stick to the plan, okay? Excuse me. Still working on that sore throat. But hey, the market was trash today. Traded sideways and then dropped at the very end. Going into tomorrow, I'm expecting the same thing. It's Friday. That is going to be a good day. Already, Asian stocks are dropping. Market's closed on our end, so don't expect tomorrow to be a great day. But give you opportunities to learn. If you're, not going to trade tomorrow, try paper trading. If you are trading and you're, going to do bearish or, downside trades, you might have your pick of the litter. Find your shorts and execute your trades. So, pretty much, let's go ahead and get into this review of this trade. You guys, keep following the market as much as you can. Keep practicing as much as you can. A lot of you were messaging me about, a few other, I guess traders you follow and things like that. You guys know who you are who've been messaging me about it, but some of you guys are following some questionable people, and I'll just, want to tell you guys to take that to a grain, with a grain of salt, because a lot of times traders get so excited about learning about the market and stuff like that that they'll follow blindly anyone who positions themselves to be a good trader. But you got to ask yourself, are the traders you're following consistently profitable? If they are, how much? Because some traders can trade with like a huge account and make $200, $300 a day easily because they have $1 million account they're trading with. And not only that too, days like today when the market's down, how well is the traders that you're following doing? Are their accounts tanking? Are there trades that they're calling out, their plays that they're calling out tanking? Are they good? Are they bad? Did they make any good trades today? Or vice versa. On good days when the market is good, are they having bad trades? You kind of want to be able to fill that stuff out. If it seems like the trades are only following the markets, a blind person can throw a dart and hit at that point. If the market's bull, everything's going to be great. But those that you see, like myself and others, who are trading on red days and are consistently profitable, might be the ones you want to probably pay more attention to if you're trying to day trade. Investing is different, and of course the markets that you trade are different. But understand that if you're, following a trader, make sure they're just not showing you all the glitz and glory of the days that they make green on green days. Show me some green on some red days. Show me some red on green days, so that you know that they're, actually trading. So just want to kind of keep that note in mind for a lot of you guys who are, new and just now getting into to trading. I'm not knocking any specific traders or anything like that. I don't know. I don't look at their financial statements. All I can do is keep giving you guys as much information as I can to help you out with being better traders. So with that being said, let's go ahead and get into it and look forward to some more stuff. All right. Make sure you guys comment or, like the video, do all that other stuff. Help out the algorithm, help out other traders who need to learn this stuff as well too, okay? Let's get into it.
All right, guys, what's going on? It's Eric here. Let's go ahead and get into it. We're going to recap the one and only trade I took today, just so we can kind of get a feel of my thought process and see how I saved myself a lot of different headache. So hopefully you guys can start implementing this into your strategies as well too, if you need to, and hopefully save you some time and money. It is what, January 13th. Tomorrow's Friday. I don't know, man. We'll see how Friday goes. Today was not a good day in the market for bull traders. Market's been down. It started off pretty decent, then traded sideways pretty much throughout the day, then eventually dropped. It's the way the cookie crumbles. Um, today. I think this is my first red day of the year. I gotta go back and look at the journal, but I think this might be my first, if not second, red day of the year so far. So one or two red days out of the past 10 to 20 or 10 to 11 or so trading days, however many we had, I can't complain, especially when those losses that I had are very small. You guys got to understand, not every day you're not gonna, not every day you're gonna win. You're gonna have some losses, and that's okay. What I'm really, proud of today, I didn't get sucked into any bull traps trying to revenge trade. That's something you'll just learn as you go on with trading and getting experience and looking at charts. You'll be able to identify when some stuff is, pump fakes and things like that. And, when your setup isn't there, you don't trade it and don't force it. Excuse me, I'm still, trying to get over this, little strep throat, cold slash whatever it is. It's slowly getting better, but you know, hopefully I don't sound too muffled or anything like that, but work with me here, work with me. Anyways, we're gonna recap this ISPC trade. Um, Again, losing trade, but I'm proud of myself. I stuck to my plan and saved myself a bigger loss than what would happen. And I knew that was going to happen. Um, and the important thing is, guys, and this is why it's important for you to review your trades. And it's not as simple. Reviewing your trade is not as simple as I'm making it look. And of course, I tell you guys exactly how to review your trades and what to look for, so you'll be able to improve on it. This isn't something that is taught by a lot of gurus. They'll probably just like usually go over, oh, just review your trades. But if you don't know what to review and what you're looking at, you're not going to get better. And the important thing about that too is it's kind of hard to know what you need to get better at. Not everybody's good at, reviewing their own stuff. It took me years to kind of get better at it as well too, because the time that I was doing it, yeah, I knew to review my trades, but I thought I was just reviewing certain things, but I wasn't. It was a lot that was missing. And then, as I got more into the market and more experience and getting more insight from other traders and stuff like that, I started to find out where I was missing to help improve myself. But yeah, reviewing your trades is important. And this is why I want you guys to take a look at this trade with me that I took and kind of get my thought process bent on this based on my strategy. Okay, so ISPC was the only trade I took, and I took this thing during pre-market. Right off the back here, you know what? I'll go over what I did wrong after we analyze this trade. Anyways, alert went off on it. I didn't trade BTCS. That was a flop. I seen that one dropping a mile away in the pre-market at the way it was dying down. OLB was trash. Didn't really hold his gains either. Then he had a few alerts, and then ISPC came. Now, first and foremost, ISPC has been a former runner the past few days, so I'm thinking that's kudos. That's one good thing. Again, you guys know I need reasons to enter into my trade um, before I do it. If I do enter it with a little bit of reason or not a lot of reason, I'm quickly getting out. The more reason there is, the more reason for me to stay in. But anyways, ISPC had the alert come up. See there, COVID. These COVID plays have not been sticking. They've been popping drops all throughout since they've been coming out. But anyways, it's ISPC. I figured it would run a little bit more than what it did, but it didn't. Anyways, so it came up perfect. I missed all this run right here. A good, 50 cents to $1 move. That's fine. Okay. So naturally, what am I going to do? What I tell you guys all the time, wait for it to show support. So I did. At this point here, it started to pull back, and I'm noticing, hey, it's starting to, curl up a little bit. It's holding its gains. My strategy here was to enter this thing between $8, $8.10, which I did. I think my average in there was like 807. Sorry, I'm looking at messages. So 807 was my average in there. So I get filled at this point right here. It was like 807. I got filled right here because I knew it was starting to curl up. And the price action was still there in pre-market. It was one of the volume leaders at the time. So I'm thinking, okay, we might have at least a little bit, one more leg up, two more legs up. Something like that. Enough for me to get a little bit of a gain and start the day off green and be ahead of the market, right? However, as I'm anticipating this move to happen, guess what? Boom, breaks down. Let's do this in real time. Um, so you guys can kind of get my thought process on this. And I'll pause it back because watching it in real time is, a little bit different. And I got out of this trade like right after that break. Thank God I did. Because it gave me the signs. One, I broke my rule, one of my rules that I use for the strategy I'm trying to use. And it's kind of all on me. It has nothing to do with, oh, I was cheated out of it, blah, blah, blah. Someone's watching my trades. None of that. It's the fact that I messed up here. One, being impatient. As a bull trader, I'm ready for this bull market to come back, and it's not happening. I'm trying to force a trade. I'm trying to cheat the strategy and get in before I'm supposed to get in, which was the main reason why I messed this up. And I'll show you guys why I messed it up because I'm supposed to wait for the signal to get in, and I didn't. I tried to anticipate it, and that's never a good thing to do. But let's go ahead and play this. Alert goes off. Make sure I'm playing at a normal speed or a little bit faster. So you got time. It's going to alert it. Price is moving, price is moving, price is moving. And I don't know if you guys want to or not. You can kind of pay attention to the volume bars over here. That's just kind of showing you where the buy and sell orders are. I'll do another video on that so you can kind of get a hang of that. But anyways, let's stop it right here. So I got in right here, or I'm getting noticed at it right here, and I'm like, okay, it's topped out at 886. Great, cool. I know it's going to pull back. Let's see how much it's going to pull back. So I'm anticipating it's probably going to pull back at least to $1. Half and whole dollar marks naturally just happens with traders. They love that. So I was seeing that it was holding up good levels between like $8 and 8.25. So I'm okay with getting in around that range. Hopefully around the $8 range. So I got an 807 like right around here, right? Knowing this because you can see right here in the moving average convergence divergence is starting to light up. A lot of times that happens before it starts to, curl up and pop. However, you're not I never really try to enter that way unless I'm going to scale in and scale out of the trade. And I wasn't planning on doing that with this trade. A little bit more complicated. If you guys don't know what I'm talking about, sorry. But those of you who do, understand like, my scaling and how I like to scale in and out of trades. Anyways, so I got in right here. And at this point, let's play it. It attempts to cross the volume weighted average price, but it got rejected. Then it pulls back up again. It starts to come back down more. Now at this point here, boom, I'm selling. I'm cutting my losses at like 798. Eric, why did you do that? Here's why I didn't do that. Here's why I did that. One, already when I got in here at like $8, 8 to 10 cents, my range for me to go ahead and cut my loss was going to be 775, 750 at the most. Okay. It didn't quite touch there, but it was getting there because I was looking at the level 2 orders and more sell orders were showing than buy orders. So there's one thing. Two, in order for this to be a bullish trade, for me to look at it as a bullish trade, the exponential moving average and the volume weighted average price needs to cross up. It attempted to do so here, never happened. That's one sign. You got the sell signal flashing right there. That's another sign. That's 3 signs right there of this thing being bearish. Another fact that look at the moving average convergence divergence and look at the squeeze pro indicator and look at the relative strength index. All those things are pointing down at this point. Now you might be saying, hey Eric, what if this is a false signal? What if it turns and pops up? Are you going to be mad? Of course I'm going to be mad. Who wouldn't be mad? However, there's more signs saying no than there is yes that it's going to happen. All right. Normally I need to wait for anything for the most weight on my shoulders for me to be more confident about this trade. I need this to cross. I need that exponential moving average and that volume weighted average price to cross so that I am in bullish territory. So even if the stock does go back down, at least I had some bulls on my side. It's just more about the odds of the stock continuing to rise than to fall. Whereas here, the odds are better that it's going to fall than it is going to rise because you have more bearish signals than bullish signals. And guess what happens? It continues to go with the odds. My green candles are light, my red candles are getting thicker and thicker, and it just kept dropping. So why would I stay in the stock at this point? Now, let's say if I cut my losses here, I could always re-enter this trade in at another point. Let me pause this here. Let me use this here. This might help some. I should do like a whole, I guess, tutorial on this for you guys if you use this tool. It will help you a lot with your risk management. So I'm getting in at 8. I'm in at 807, right? And of course, the more you use this, the quicker you'll have, time to play with it and analyze it. It would be more ideal for me to take my loss with the, say 2-to-1 ratio or 1-to-1, however, whatever risk reward ratio you use. Take my loss and move on and try to enter back into the trade again. Then for me to try to wait it out. Because if I cut my losses here, what if it goes down here and pulls back up? I can always get back in the trade and regain my losses, as opposed to trying to hold on to it and hope, and now trying to add to a losing position. Just doesn't make sense, guys. You won't know that until, I think you'll learn that the best when you actually try to do it over and over and over again, and you see that it doesn't work. It's better to scale in and winning trades than it is to scale into a losing trade. Trust me. Um, so yeah, so I mean that's pretty much why I cut that loss there. It hit my mental level resistance. I didn't have a, obviously it's pre-market, so I don't have a hard stop loss set. Mentally, I do mines, but I've become very disciplined mentally, you know, so it helps. And plus, I don't like to show the orders. We'll talk about that and, manipulation in another time, and we do in the course. But anyways, um, yeah. So anyways, I execute the order, and I much rather again get out of the trade, wait for it to go my way, and then get back in because the odds are it might not go back. With it being where it's at and cutting my losses, is odds are it's not going to go back to where I want it to go. And guess what? It never did. Now, I could have been holding this thing for a long time, and look at that. This whole time, not making anything. Why? Because it never got in bullish territory. And you'll see that too. When you're holding on to hope, you'll get more confirmation when you look at like something like the Squeeze Pro here, or you're looking at the moving averages. If this is the height of the moving average at this point, and it's only this far into the, into price action movement, clearly it's telling you that there's not enough bulls there. The bears are dragging this thing down, guys. So why stay in the trade? Just cut your loss, get out, wait for it to come back up. When it does pop back up, see how far it goes. Wait for another pullback, see if it holds support, and then ride it up again. That's just how it works. I mean, that is like the purest form of momentum trading. I didn't learn that for a long time. Before I had the knowledge to use all these tools and stuff like that, that could have helped me. So I just wanted to show you guys that this is my one trade for the day, losing trade, but I didn't lose much. I'm glad I stuck to my plan because it could have got worse if I didn't. Um, there's no point in me. I don't need to review anything in this trade. I know what I did wrong. I did not wait for my bullish signal that I usually wait for, and that's my fault. Trying to anticipate a cup and handle break that didn't happen, and I got, kicked in the balls for it. It's just what happens. But a good thing I was able to read all this at once and understand to myself, hey, this is not going the way I want it to go. Cut my loss, move on, wait for the next move. Okay, there's nothing wrong with that. You're not going to win every trade. But the good thing about momentum trading is, guys, I could be wrong here 3, 4 times throughout the day. But the moment that I get that one trade that breaks out and does what I need it to do and what I'm anticipating it to do, I'm green. Those 3, 4 losses I took just got taken out by that one good trade. Okay, it happens. You just got to know your stuff, know your strategy, know your charts, know what you're looking at, be able to read what you need to read and understand what the chart is telling you, what the price action is telling you. And this right here was telling me, hey, bears got it. Cool, y'all can have it. I'll take that L. So Anyways, guys, tomorrow's Friday. I'm anticipating the market to be crap again tomorrow. I may trade to the downside if I can find some shorts available and any of the brokers I use. Um, I'll post the results, of course, on Facebook like I always do in the Facebook group. But yeah, tomorrow I'm looking for it to be a bearish trade. I might sit on my hands, probably like the rest of you guys did today too. I sat on my hands, but there was nothing else to do. Read a book or something. There's a lot of stuff in the Learning Lounge. I'm pretty sure you ain't read everything, but you always learn more. So take, you know, tomorrow with a grain of salt. If you're a bullish trader, if you're a bear, hey, have at it. You'll probably dominate tomorrow. Start getting you guys with the options trade, start getting your puts ready and all that good stuff. But we'll see what tomorrow brings. I'm not, anticipating nothing big. It's Friday. Um, in fact, a lot of so-called analysts and professionals are saying that this year probably won't be a hot year for the market. But guess what? We always find a way to stay green. All right, so look, you guys take it easy. I'm gonna get a little bit of rest here, get the watch list ready. Um, we'll get ready for tomorrow. Once my throat and stuff like that starts clearing up, we'll start going live more often with the trades, and you guys can watch my screens too. Just right now, I got a lot going on. You guys know I trade mostly, but I do have other things and other ventures that I'm into that takes up a lot of my time as well too. So I'm just doing this, as a courtesy to try to help you guys out, help you stay green. If you have any questions, let me know. Message me, put in the comments. Comment below in the video too. Let me know if you guys traded anything today, because even though I didn't trade anything, doesn't mean that you did. But also knowing what you might have traded will help me be able to analyze it. Because some other traders might have the same question. We all trade different, but it doesn't help to, it does help to kind of, know what you're looking at and, be able to share that experience with a lot of different traders too. That's what we're here for, okay? Um, to learn and get better, but let's look forward for tomorrow. Remember, after Friday, it's a 3-day weekend, MLK holiday. Shout out to MLK. We got Monday off, so it's going to be a short week next week. And, we'll take what the market gives us. Don't force any trades, especially Friday. Um, let the market come to you. If it's not there, do something else. All right. All right, guys. I will talk to you later. Y'all stay green.